Well, good evening, everybody. Sunday evening, October 2nd, 2011. Bringing a little update. It's not really much of an update. It's just more evidence that gold and silver are real money, and people are taking notice, including big countries, including poor countries. Meanwhile, the news and everything else, gold, blah, 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 it's going down, this and that. Well, there's quite a few countries who really don't care about that, what they see on the news, and they are kind of saying otherwise. So I'm waiting for Harvey Organ to update his blog, see what he had to say about the COT report. And without reading the whole thing to you, I pretty much read it when I read that other blog that had the data. And he's saying the same thing for gold and silver. If this isn't bullish, what just happened with the COT report of the massive drops in the short positions, etc., if this is not bullish for gold and silver, he said, I don't know what is, basically. So he mentioned some of the stories coming out right now. And of course, this is probably going to make you want to go short JP Morgan in Bank of America. As much as I said, just stick with the freaking physical silver. We scroll down here and talk to you about this. He said, let's take a look at some of the news here that affected gold and silver prices and the economy. The first story is a dandy one, as German banks have now entered the scene with lawsuits against Bank of America and JP Morgan. The mortgage putbacks globally are huge, and this will cause the default of Bank of America. Please remember that on Wednesday's commentary, we highlighted to you the huge derivatives underwritten by these two behemoth banking entities. Both JP Morgan and Bank of America are sitting on so many piles of paper garbage derivatives in the multi-trillion, tens of trillions of dollars, it would make you sick. But it is what it is. So, he says, and this, he's referring to this guy, Tyler Durden, again, from our Zero Hedge, who I've mentioned before. This guy's he is on point with this stuff. Will start of Landesbank mortgage litigation against Bank of America push stock to new 52-week lows? ? He said, when it's all said and done, Bank of America will have no choice but to charge its 6 to 8 remaining clients about $1 million each time they use an ATM, making fun of the $5 charge. And now he's saying there's going to be 6 to maybe 8 people left with Bank of America by the time this is all said and done, so they're going to have to take that $5 fee that they want to charge monthly and make it like, $1 million. It's funny. Each time they use an ATM, or ATM transaction is executed, because the bank will be so deep in mortgage putback litigation, it will have a negative market cap. I would also like to bring to your attention, specifically I think Bank of America in this case, but it affects the other banks too. You know how we had the 50 attorneys general for all 50 states, United States of America. The bankers said, well, here's our proposal. Don't kill us in court. Don't, sue the pants off of us and basically destroy us on behalf of your citizens in the state. Here's our proposal. We'd like to spend, ultimately billions of dollars is what it's going to cost to settle out of court. We don't want to go there, kind of thing. Can we do that? And we'll promise not to do this again. And I believe the Attorney General from California, a female Attorney General, has just pulled out of that whole situation, saying, you know what, I don't like what the banks proposed. Consider California out. And by the way, California is the biggest in housing foreclosure than the entire country. It accounts for 10% of what's going on in the foreclosure scene, California alone. So it's massive. And the repercussions of all the people who were kicked out prior to this because of the robo-signing and all that, I mean, these people really could probably stand to go back and get into their house. But from what I understand also, I think California is a non-judiciary state, so the banks, of course, just falsified the paperwork and shipped it off. You're foreclosed, have a nice day. You don't even get your day in court. Because if you got your day in court, you could pretty much prove that they falsified the documents, it's impossible, etc., and then stall your foreclosure process for potentially years and possibly win. But since California is not a judicial foreclosure state, from what I understand, it's just a simple process of filing paperwork and paying a few fees to the clerk or whatever, and then, okay, you can foreclose now. The issue was that they got fake documents with fake signatures. That's fraud. That's major criminal activity. That's federal type of, you and I did it, we'd be in federal prison. Not locked up in jail for 30 days or something, local jail. No, you'd be in prison. Federal penitentiary. So, the latest news for the bank is about the worst possible kind. The wave of lawsuits filed against the Countrywide toxic mortgage, Countrywide being the company Countrywide that Bank of America sucked up, filed against Countrywide toxic mortgage receptacle has just jumped across the Atlantic, and after the Norwegian Sovereign Wealth Fund recently started proceedings. The real threat, German banks, have just realized that Bank of America is nothing but a legal liability piggy bank and have sued Moynihan's house that taxpayers built. Moynihan's house that taxpayers built. Furthermore, since it is precisely purchases of the mortgage-backed securities and the garbage, whatever, from Bank of America and other banks that caused the collapse of the Landesbanken system, with Germany going on the offensive and now trying to recoup as much money as they can, look for gray market putback estimates to soar by another $20 to $40 billion, which will result in Bank of America selling the other half of its stake in the Chinese construction bank any minute, especially with Chinese banks starting to tumble like dominoes, also predicted by people like Peter Schiff, I think, Gerald Celente, etc. They're going down to now that the Chinese are starting to slow down, economically speaking. From Reuters, J.P. Morgan Chase & Co. and Bank of America Corp. were hit with new lawsuits by investors seeking to recover losses on $14.5 billion of soured mortgage debt, expanding the litigation targeting the two largest U.S. banks. The two largest giants, right? The two behemoths. The bigger they are, the harder they fall. I know you've heard that. And oh boy, is it going to feel good when those turds finally get destroyed. C-Link Funding Ltd. said that between 05 and 07 it bought nearly $2.4 billion of these residential mortgage-backed securities from J.P. Morgan and $1.6 billion from Bank of America, and reliance on offering materials that were misleading about the quality of the underwriting and underlying loans. Now, the best part about this, because these two behemoths are like massive into the derivatives, and it's J.P. Morgan's short position on the silver market, of course, that is really holding the prices down, and then when they can only do so much, they tell the CME group, go ahead and hike margins again, pushes down, scare these people away, only to find out more people keep piling on the physical scene. So the liabilities basically sitting on J.P. Morgan's sheets right now for these derivatives, which of course include the silver problem, silver contracts that they're shorting. Every time it goes up, they're getting killed. And then of course this mortgage-backed crap that is being shoved back in their faces and through lawsuits, doing it. Now, what would happen to all these lawsuits and mortgage lawsuits on Bank of America, J.P. Morgan, the silver 2 or 3 class action silver lawsuits for them manipulating, which again, I am on one of those class action lawsuits. What would happen to all that? Bankruptcy, gone. All of it would go away. Which would also mean their silver short position would have to go away too. Because where most people invest in something, you would hope that you would call it an asset, not a liability. For J.P. Morgan, silver is basically a liability for them. When it goes too high, it's a massive liability. They've got to crash the market down to keep it under control because they're shorting it. They need it to go down so they make money, not up. So it becomes a liability. All of that would go away. So if it all went away, what would happen to the silver and gold markets? Would they be finally be able to run free without that leash? Well, you'd still have the CME group, margin hike, this and that. But what Bot said, a major company is about to go bankrupt. Not too specific, but when we all hear the news, it'll be pretty obvious. Not to say that there's not more coming, because there is. And the other ones that are coming, as the Webbot talked about, will be a chain store that we all recognize. I mean, oh my God, it would be like the dollar store or something. Just some big chain store, recognizable by everybody, is going to go under quickly. That's aside from what I just told you about something big collapsing here shortly, company-wise. That's something else. So now Gerald Celente basically recently came out, and he's commenting about it here, but how he just said it was just central bank engineering that pushed the prices of gold and silver down to scare everybody out. It was getting a little too crazy for them. Deliveries and everything, paper contracts, that too much, pushed the price down. So we already know that. Gerald Celente really didn't, tell us something we didn't know at this point. But he's right. He's been calling it. HSBC talking about the big fall in gold prices, and it details in a quantitative manner what the central banks orchestrated. Based on almost 40 years of data, this is from HSBC, the drop in gold prices last week represented a 3 standard deviation move, down 8.54%. According to the data, this has only occurred 7 times since gold became freely convertible in 1972. This made the week ended 23rd September the 7th worst week in terms of percentage price performance in almost 40 years of trading, or more than 2,000 weeks. Boy, you guys don't want to be in gold or silver. No, sir, get out of it. That's what that's about. But as the COT report said, we don't think so. Propaganda, news, HSBC, our financial expert, he makes, $500,000 a year. Yeah, gold is not good. Okay, we'll see about that, partner. The European stock markets around the world plummeted with this news out of Bloomberg, and inflation jumped 3% on an annual basis this month from 2.5% last month. The German DAX was down, that's the stock market over there, 137 points or 2.5%. And here's the story that caused European stock markets to tank. ECB, European Central Bank, effort to contain crisis is complicated by surprise surge in inflation. September 30th, 2011. Surprise surge in inflation is also my favorite word. They just use a different word for the same meaning. Unexpectedly. So I'll go ahead and say it properly, that they would like to say. ECB effort to contain crisis is complicated by unexpected surge in inflation, when we all know it's very expected. And I meant to mention this in another video, and it just hit me after reading this, that the old Ben Bernanke was recently quoted at some little meeting he had as saying he will not allow deflation to take place. That if he starts to see signs of deflation taking place, he used the word quantitative, I don't think he called it quantitative easing, but I think he used the word either quantitative or easing, not both together, one or the other, and in the sentence it made the same sense as you would expect him to say quantitative easing. He said it twice. It just hit me. I just remember that. This is like 2 or 3 days ago. So, this unexpected rise in inflation. Oh my God. And then, of course, the other news, Greek default. Investors concerned that European governments may be unable to contain the debt crisis and prevent a Greek default, has weighed on equity markets and pushed the euro lower, which is why the dollar index is sitting around 80. Ooh, dollar, put your money over here, guys. Dollar index is climbing. Everything else is not good, just like that idiot bimbo reporter. Gold's backed by nothing, but the U.S. dollar is backed by the U.S. government, which is what? The biggest behemoth leech on the face of the earth, sucking up 25% of the world's resources. We have the largest deficit in the world. Matter of fact, you probably could combine the rest of the world's deficits just compared to ours, and you might be shocked to see that ours probably destroys theirs. All of them put together. So what do those words mean? It's backed by the U.S. government. If I told you I need this loan today, I need $1,000. I've got a 2011 BMW, whatever, just pick them all, M3 or M5, whatever it is. That's my collateral. You'd want to loan me money immediately. Sure, that's your collateral. Hell yeah, I'll give you the money. Oh, but I forgot to tell you, it's in the bottom of the ocean, about 7,000 feet down. Well, that changes the whole thing. Well, then you have nothing. Get out of my face. I'm not loaning you anything, right? Same thing. The reason I'm telling that, you know why I'm telling you that, because that's the example of American government. It's backed by the American government, which means run for your life. It's backed by nothing. Run for the hills. Gold's backed by nothing. Correct. Gold comes from the earth. It's been money since mankind's been around for the most part. At least several thousands of years. So his silver, and these bimbos are out there with their little earpiece pretending to be, I'm a newscaster. I'm a investigative journalist. No, actually, you're taking something in your ear that someone's telling you to say and just saying it, pretending as it's coming out of your mouth. That's why your hair is always covering your right ear, but your left ear, your hair is pulled back so that people can't see you getting orders, propaganda orders from your higher-ups to tell you what to say. Because you are incapable of thinking for yourself. You are incapable of knowing what real news is and what the markets, what gold, silver, governments backed by, money backed by governments, gold and silver, economy, inflation, deflation. You know nothing. You're a bimbo that you could find someone who didn't even go to college who could do better than you. So that idiot lady, whoever she was, on the news trying to say that. It's just like the webbot said, get ready. It's coming soon for an influx of demonizing gold and people who own gold. Nah, demonize them. And then it's going to get to the point where, hey, they're the ones who are not patriotic. They're the ones hoarding the gold and silver. They're not patriotic, and they're causing this problem. That's what it's going to lead to. Doesn't matter. Stand your ground. We are patriotic. By going back to what the Constitution still says is valid today. Still says. It never was redacted. Never was a law created to remove it. The states shall not use anything but gold and silver as legal tender for all transactions. Basically. And don't quote me word for word, but that's what it says. It's still on the books. So if I have a piece of paper, Federal Reserve note, how could it possibly be good for all debt, public and private, when the Constitution is still valid, the law is still in the books, that says you have to use gold and silver? Well, they probably got out of it and got it out of people's mind back when, well, you guys can't own gold, we're going to confiscate it, we're going to give you fair market value today, cash money, give us the gold, and we're backing the dollar by gold, okay? So it's still legal tender. It conforms to the Constitution because the money is backed by gold, even though that still isn't what the Constitution meant. They got away with it. And the people said, well, okay, at least it's backed by gold. And we used to get these certificates, so if I went to a bank, I could get gold or silver out. No, not anymore. 1971 comes around. Well, a whole generation of people have come and gone since then. Now we're going to stealthily remove gold out of the scene and just give you back currency, paper-backed currency of, she said, backed by the American government, which is nothing. But we forced the world to do it because we made a deal with OPEC, the nations, OPEC, oil-producing countries, to only sell their oil for paper U.S. dollars. No other currency. They agreed. Everyone's happy. They've been making money. We've been offloading our debt. We became the backing of the world. We were the gold, so to speak, of the world. Now that's kind of going away. They're running from that as fast as possible. There's deals between China, Russia, and all these other countries that are saying, don't even worry about the dollar and gold. We're going to deal together. It's only getting worse, as far as we're concerned, getting worse. So as the central bank cycle goes, they understand we have to back the next currency, the next thing we do has got to be backed by gold, precious metals, etc. Has to. It's guaranteed. How do I know? Because the countries are buying gold left and right across the world. Ben Bernanke, even said to Ron Paul, when Ron Paul asked him, is gold money? No. What? Yeah, he said no. And then Ron Paul busted his butt by saying, then why do you central banks, specifically the Federal Reserve, why do central banks store it? Why do they have any? Why don't they have diamonds? Or diamonds are a store of value also. Why don't they have diamonds? It's just tradition. Yep, no family tradition. That's what that is. This recipe you just ate, when I was at Pastor Dowell's place for 5 days, and his wife made lasagna and corn and some kind of little coleslaw stuff, and I was like, I don't want coleslaw. I can't stand coleslaw. And then I ate the lasagna, and it basically punched my mouth loose. It was so good. I had to pick it back up and put it back on. It was just awesome. And he goes, brother, you might want to try that coleslaw. If you like that much, you may be in for a surprise. I said, you're probably right. So let me have a little bit. It was fantastic too. So, anyways, go throw that out there. But the bottom line, and let me just get to the point here so I can end this video. Where it said specifically, IMF data, International Monetary Fund, which is a scumbag organization anyways. That's where the world currency should come from when this takes place, if they can pull it off. IMF data published yesterday indicates Thailand bought 9.3 tons of gold in August, and Bolivia bought 7 tons. Russia, as well, has added another 5.6 tons. But gold isn't money. Bernanke is right. It's just a tradition. And that tradition is going to Russia, Thailand, and Bolivia, of all places. They are all preparing for what they already know. They're not going to tell you in advance. There's not going to be a news article. The president wants to speak today to let you know you should probably be getting into gold and silver. No, your country uses paper. He's going to do anything he can. The news media and everyone's going to do anything that they can possibly do to let you stay. Get away. Don't look over there at money, i.e. gold and silver. Look over here and continue using paper money. That's what we use. But behind the scenes, as Pastor Dow was saying, I think earlier today, and by their fruit you shall know them, whatever, which another interpretation has been, and by their deeds you shall know them. So, talk and say one thing, kind of like Obama himself, hope and change, I'm going to do this, I'm going to do that, I'm going to fix the country. Talk is one thing, but by his deeds, what has he done? And the things he promised he would do, did he not do? Yes, that's correct. So by his deeds, you shall know him. You shall know him as a thief, liar, whatever the situation. In this case, a complete liar. So, and by the central banks and countries' deeds, we shall know them. They're buying freaking gold by the tons. But gold and silver just went down. You guys shouldn't be messing with it. They don't want you, the peasant, messing with it. And that's why they said, look, we're going to teach these peasants a lesson. CME group, go ahead, go up the margins. Tell all the boys in advance, a couple of days in advance, so that they can get out of their positions. Okay. And they did. We saw it happen in advance, Thursday, Friday. Big drop-off, massive sell-off, especially in silver. Only to find out the report comes out late Friday after the markets close. We're going to be upping the margins on Monday. You have to comply by end of day Monday. Oh, thanks for the great notice. Oh, so that's why the markets completely collapsed today in gold and silver. And yesterday. The insiders sold out. But that was their way of saying, that's like them trying to spank you. Bad boy, don't you allow that gold and silver to go up. Bad boy, we got to spank you, get away from it. Only to find out that now we're really bad. You spanked us, but now we're even more upset, and we're running to the coin dealers and the big bullion banks and pulling the real physical silver out. And all these other countries are also saying, yeah, give us some more too. So now they're saying, uh-oh, that didn't work. That's kind of like yelling at your kid and, okay, hope he gets it. I'll put him in timeout. Teach him a lesson. Only to find out he's pissed off that you put him in timeout, and now he's really showing his butt and, okay, time to get the belt out, right? And what would happen would almost be like you hit him with the belt, and then that doesn't do anything, makes him even madder, and then he starts whooping you, your own kid. That's what the people are going to be doing to these banks and these governments regarding precious metals. They're going to try to spank you, then spank you harder. Okay, we're going to up it a level. Spank them harder, only to find out more and more and more people. Just like the Wall Street protests. Start off with a few people, few hundred, few thousand. Mace in the face of a couple of people. That was it. Massive protest starts taking place. They protest across the entire freaking Brooklyn Bridge, thousands upon thousands. I saw a video where they just went down like that. As far as I could see over that bridge was heads of people piled like sardines next to each other. They arrested 700 people. Those people were the ones who said, we don't want to get off the bridge. Other people said, yeah, I'll go ahead and move. So, anyways, that's all I got for you tonight. And we shall see how the markets look this week for everything, including gold and silver. Be curious to see if they really try to push it down even further or if they're done for the time being. We shall see. Take care.